Hey everybody, hope you're doing well. Today we're going to cover the QQQ, or essentially the NASDAQ-100 for the week of May 10th, 2021. This is everything we talk about is based upon Prep to Grow's big data AI platform called Grow. It is our recommendations based upon the data. If you like this content, please like and subscribe. So let's just jump into the weekend review. So what happened last week, or essentially this week? A lot of growth, as you can tell from the chart on the right side. We're still in a rapid growth for the year for the Qs, which is awesome. They're accelerating. They're 7% stock up just for the year, which is not in alignment with the actual corporate growth or the analyst expectations for the year. For Prep to Grow's growth, we're expecting 39% growth, or that's already happened for the year. Typically, you'll see the growth in the stock match up. From a buying opportunity, it's great. The Qs are expected to accelerate throughout the year, although the timing to buy may be not the right time with the little bit over inflation within the market right now. The other thing is analyst expectations are also exceptionally high for the year. They've gone up 26% for the year. Again, disconnect from the stock price. We're projecting the stocks for the Q are going to go up for the year, again, roughly 39% based upon the current pace. So it should be a good time for Qs. The challenge is that our data is showing that the broader market is looking for potential pullback. So let's jump into what's for next week. We're projecting a bear. So what we're seeing is based upon our data is that even though growth is outpacing stock price for the Qs with mixed economic indicators, slowness and growth on non-Q or non-NASDAQ companies and the potential for a pullback are very strong. We're currently still in a market bubble. It had settled a little bit over the last couple of weeks, meaning that growth was starting to keep up with the stock price over the last couple of weeks, but now we're looking for a pullback. So we say we have ratios at Prep to Grow. So essentially anything less than a 1 for STG ratio, which is the stock to growth ratio, means it's a buy. Anything above a 1 or even at a 3 means that it's a pullback territory. Or for you put option traders out there, it's a good time to do puts. If we look at our 30-day projection to the graph on the right, which is the bar, which is the pie chart, there's more bear signals than bull signals. Also, the volume in the open interest is higher for bears versus bull. So the market's also looking at this as well. So we're projecting just a bit of a pullback in the near term. A lot of people talking about this. We don't agree with that from the Qs, but the Qs obviously are highly influenced by the general market. And because of that, there's going to be a pullback. 5% in the near term, certainly sometime in the next couple weeks, is our projections and are based upon the data, again, from our big data platform. Let's look at a couple of other bear versus bull signals. So as we go through Prep to Grow, analyze the signals in the market, and cumulative kind of talks about will it be a bear versus bull. We are 30 days looking forward. So if we have projections that are at the beginning of April, it means it'll happen in the beginning of May, or things that are happening right now means that'll happen within June. So what we've seen in April is that there's a shift that's occurring in May where we're expecting a pullback. So bear signals have gone up way in excess of where the bull signals are. And so we're expecting that this pullback is going to occur at the time. In the June timeframe, we're seeing that there's going to be another shift where bulls are going to be greater than bears. So that's when the stocks will start to rebound for the Qs and go up. And this act takes into account not just Qs and how they're performing in the NASDAQ-100, but also the macro conditions that are happening around that. Everything from economic indicators like unemployment rates today, which was not as expected, the stocks and performance related to non-Qs companies. Just for background, Prep to Grow predicts company performance. We don't predict stocks. So when we look at bear versus bull signals, it's really we're predicting that companies aren't going to perform as well within the next 30 days. Either there's events, there's layoffs, there's macro conditions, there's overinflated stock prices, whatever it is, there's going to be company performance that's going to impact the stock price. So announcements, layoffs, whatever it may be. So we're expecting that May will be a rough month, and June we'll see an uptick. So let's move into who's announcing this week. So there's 4 that are announcing, which makes up about 3.3% of the total Q holdings. Last week was heavier at 7.6% for May 3rd, and the week before that, which was in April, last week of April, 54% of them announced. The Qs in general had exceptionally strong earnings announcements as we projected, as we've seen the growth. The macro conditions are starting to suppress it. This week, there's only 4 that are announcing. However, there's an exceptionally important one, which is Applied Materials. If you watch high tech and stocks in general, you'll know that Applied Materials is a leading indicator for a recession. If they miss numbers or announce forward-looking guidance lower than expectations or an adjustment around that, it's a very good signals, and it's historically always proven out that we're heading into a downturn. More than just a 5 to 10% pullback. This is recessions starting to happen. Applied Materials and Lam Research and those semiconductor capital equipment companies are really the fuel that drives today's economy because they produce the chips. So if they have a bad quarter or reduce their forward-looking guidance, that's a very bad signal. However, let's jump into the pricing and let's talk about Applied Materials, and let's jump into their applications so we can talk about them a little more accurately. So this is the Prep to Grow application called, for subscribers or new subscribers, or if you're looking to see who's announcing for the week, you just jump into filters. You head down to the ETF you want to look at. In this case, we'll just pick the QQQ. We'll hit it if they're making earnings announcement the next 2 weeks, hit apply. And then boom, it'll come back and show you who's announcing on the next 3 weeks for you. So EA, Splunk, and a few others are announcing for looking out based upon the other filters that we had applied. So let's take a look at the ones that are announcing for next week. And again, there's 4 of them. There's Marriott, Electronic Arts, Applied Materials, and Cisco. Let's jump into the ones that have unusual option activity. Applied Materials is jumping in the first. So somebody's making a pretty good bet on them for the option for a put on August 20th, 2021, expiration date, a pretty high cost. And the volume to open interest is 1.18. So let's cover Applied Materials first. So Applied Materials, we've been tracking since 2012. They're announcing their Q2. They're based in the Silicon Valley, one of the, again, the leading indicators of what's going to happen within the broader market. Again, if there's a reduced and forward-looking guidance, that's a bad sign. They're part of the SPY. They're part of the QQQ. They're going to announce on May 12th. This is a momentum play that was projected and given to our subscribers because of the open interest rate, open volume to open interest ratio. It's not a lot. I mean, it's 258 option volume to open interest. This occurred on May 4th, so somebody's making a bet that Applied Materials is going to miss expectations. We have a very low accuracy around predicting puts for Applied Materials. We have a very high accuracy for predicting calls and stock prices. What we see on the other side of this is that Applied Materials is going to crush it. Their earnings, they're at an all-time growth high. Has never been this high since we've been tracking since 2012. Their stock price has doubled in the last 7 months, which is a concern, which is probably why somebody's doing an option or a put against them. Just because their stock growth has doubled again in the last 7 months, they're expecting a pullback. I think it just limits the growth potential for Applied Materials. We're not in it. We probably won't get into it just because the price is so high and there's not a lot of room for growth. But again, this is an unusual option activity only. This is a momentum play. This is not a prep to grow recommendation to buy a put on it. It's just a momentum that occurred on May 4th, 2021. So let's jump into the other one. Let's jump into there's another one on applied materials for the, on the December 15th, 2021 expiration date, another put, and the volume to open interest rate was 1.87. Let's just take a quick look at that. Okay, this had way more volume. So 1,300 compared to 700 open interest rate. So people making big good bets against put about on puts for applied materials about a pullback. We don't see it. The data for them is looking just phenomenal. So let's take a look at EA. I love EA. I'm a gamer, so I love EA games. I was a big Command and Conquer fan back in the day. They're based, of course, in Silicon Valley. They're in a place called Redwood Shores. They had a dramatic pullback with the mid-2020 pullbacks. They've almost fully recovered from that. They were a stay-at-home play. We're projecting, in this case, that they're going to miss expectations. We're pretty good at predicting puts on them. They don't fit our strategy just because of earnings. They are announcing earnings on May 11th, 2021. They're part of the Qs and the SPY. The main reason why we're projecting that they're going to miss is that they seem to be very questionable when it comes to earnings announcements. They miss more often than not their forecast. And so our items are predicting that they're going to miss. This doesn't fit our strategy. This is not a high enough success rate for us to make a commitment to it. Also, we never play earnings, so we're not going to buy any of these from Prep to Grow because we do not play earnings. Options are incredibly risky. Playing options in earnings is nuts. For us, we just don't do it because of the risk factor involved. We typically sell everything before we get into it in earnings season. So we had Cisco as an example, and we sold Cisco. So let's take a look at Cisco next. We've been tracking Cisco since 2012. Shocker, they're located in the Silicon Valley. They're in Santa Clara. I love Cisco. I started off my career at Cisco, spent a couple of years with them. So big fan. They've had a lot of misses over the last couple of years just in terms of ability to grow and compete. But since we've been tracking them, just like Applied Materials, they've had the highest growth we've ever seen. Their stock price does not reflect that growth. So we think that this fits Prep to Grow sweet spot, which is high growth, low stock price, or a stock price that hasn't caught up with the growth. So we think long-term Cisco has a lot of upside to it. We recommended these guys on April 30th as a call, and it sold for about 20% gain, 25% gain on April 30th. So it sold same day. Their price is at 53. Our prediction on April 3rd was essentially 53. So for April 30th, they're currently where they're at. But again, their growth is an all-time high. They fit a sweet spot for Prep to Grow. I won't be surprised if we have a recommendation come out of them in the next week or so. So let's cover the last one, which is Marriott. They are not located in Silicon Valley. I believe they're located in Maryland, Bethesda, Maryland. This was an unusual option play, activity play. We're bad at projecting puts for them. We're a lot better at calls. For us, our success rate has to be greater than 95% on a 30-day for an option for us to even consider buying, just because options are incredibly risky. They are announcing on May 10th. We're projecting, I wouldn't worry about the projection so much just because they're not accurate. This was an unusual option activity, or the ones that we saw that had the most activity with it, which was 0.82, as you can see here, which is this 569 volume compared to 696 open interest rate on the June 18, 2020 put at the strike price of 135. Now, Marriott certainly has gotten hammered from the mid last year pullback. Marriott is a global entity. While they have recovered, their growth has doubled since that major pullback. They're still not, they're a longer term play. Their price is actually has recovered quite a bit over the last year or since the pullback, as you can see here. They're at greater than the 200-day high. They're almost at a 52-week range, which is incredibly surprising. So certainly Marriott is growing. They're recovering. We feel that they're more of a longer term play with the recovery, but they're not, for us, not quite there yet. They probably, their growth and where they're at, they seem like they're overpriced. This is a good, when we look at the broader market outside the Qs, Marriott is one of them that participates in other sectors such as the SPY and QLI, which is the retail, or the travel one. They're overinflated, completely overinflated. That's why there's such a market bubble right now. People have gotten ahead of the opening in terms of buying stocks, and that is overinflated, which is going to cause what we're projecting, the pullback in the next couple of weeks. So let's jump back into the slides. So there's four. There's probably more than four, but these are the four that we track specifically. About 2.3% of the holdings. We don't think it's going to cause really any major damage for the week if they announce, if some miss, except for Applied Materials again. If they miss, that's a very bad sign. But thank you for time. We hope you have a great week of trading and you're highly successful. If you have any questions, always feel free to reach out to Prep to Grow at contact@prep2grow. This information is always posted to our website at prep2grow.com/QQQ, and it'll be in the description. But hope you have a great week of trading and be cautious. We're projecting a pullback. Take care.